Today I want to talk about project management accounting. Hi, my name is Alicia and I've been using project management accounting for about 6 years now. And I've had a lot of people reach out to me and say, hey, will you blog about project management accounting? And I understand why, because there's not a lot of information on project management accounting. If you go out there and Google it or do some searches, you'll find some stuff, but not really like beginning to end, or not information on how you do certain very specific things. And in this blog post, I'm not going to get into all the details by any means because it would take a very long time to go through those. But I do want to start at the beginning and talk to you about why a company would use project management accounting, some of the business case scenarios, and then also go through and create a project for you so you can see the flow. I'm going to do a multi-series blog about this because, again, it's a big topic, and I want to kind of touch on the different pieces and give you a flavor of how it works and how it flows together. So the first thing we want to talk about is the why. Why would a company want to use project management accounting? Well, there are different types of projects. Some of the main types of projects that companies use project management accounting for are time and material projects, which is what I'm going to be demonstrating for you here in just a couple of minutes. But there's also internal projects, there's investment projects, there's fixed fee projects, there's time only projects, and there's cost only projects. So those are the different project types. And some of the nice things about project management accounting, if you think about it at its very core, a project is nothing more than a place to gather cost. So let me say that again. Project management at its very core is a place to gather cost. And those costs can be for research and development. So let's say, for example, you're doing research and development and you do a production order. Well, when you do the production order, you can associate it with a project. So that way all the costs from that project, from that production order gets posted to that project. Well, you may also need to buy stuff. So you can do a purchase order, put the project on a purchase order, and guess what? All that cost gets posted to the project. You can also do the same thing for expense reports. So if someone's traveling or they have to go to Office Depot and buy something and they do an expense report, again, it's tied to a project. If you do timesheets, you can book people's time to a project. You can do a sales order and tie it to a project. So again, the point is that you can do all these transactions and they all get gathered into this nice little spot called project. And then once you have all the transactions on that project, if it's a time and material project, you could actually bill your customer. If you're doing capital expenditure, so CapEx stuff, you may decide that you want to turn all that cost into a fixed asset. So if you're doing an investment project, you can do all the cost, collect all the cost, and then you can actually tell that project to create a fixed asset, and then all the costs from that project will become the acquisition price for that fixed asset. If you're doing an internal project, so let's say, for example, you're making a new facility, you're building a new building. Well, guess what? You're going to have lots of purchase orders, you're going to have some expenses, you may have some hours or labor associated with that. And again, it's collecting all those costs. So there's lots of benefits to it, but at its very core, it is a way of collecting costs so that you can then either expense them or you could invoice a customer for those. It also gives you the ability to put a budget against it. So that way you can say, hey, I'm starting this project. It's going to cost me X number of dollars. And then you can do budgets to actuals for that specific project. So when you think about project management accounting, just think of it like that. Think of it as a way to gather cost. And again, you can do different things with those values, that money that you're doing there. So what I want to start out with is we're going to create a project, but before we can create a project, we have to create a project contract first. So I'm going to go into project management accounting, and then I'm going to go under projects and project contracts. Now, the contract is who's going to get the bill. So if you're invoicing something, so if you're doing a time and material project and you're going to actually invoice someone, the contract is who's going to get the bill, get the invoice. So if you go in here and create a new contract, I'll just call it Alicia. Again, this can be funded by a customer, an organization, a grant, or you could put it on hold. I'm not sure how you would do that necessarily, but you could do that. I'm going to say customer, and then I'm going to pick my customer. All right, so again, this is the customer, and this is the contract name. And you can have multiples on here, just so you know. You can have multiple funding sources. You can go down here and create some billing rules, which I'm not going to get into at this time. But down here, you can see the funding source. If you want, you could have multiple funding sources, because it could be that if you're doing a grant or you're doing different things, you could have multiple sources, if you want to say that are going to be paying for this particular contract. On the example that I'm doing, I'm just going to use one. And in most of the projects I do, I only have one, but there is flexibility around that. You can also do funding limits and funding rules. Again, I'm not going to get into those pieces. So at the very core and the very simplistic way of thinking of it is the contract is what you're going to put on the project, and that's who you're going to get do the invoicing for. So again, you can have price groups on here, you can have tax groups, and this came over because of the customer that I picked. I'm actually going to take this out because I'm not going to get into that on this particular one. You can also have a different invoice format. So like when you print the invoices into the customer, you can have a different format per contract. That's really all we have to do here. So now, the other thing to know about contracts is you can invoice by contract. So if you had multiple projects for that contract, you can invoice those together. So you can actually do consolidated invoicing by contract. So if I had five projects that all had Alicia as a contract on it, then it's going to allow me to invoice those projects together. So that's another function of the contract. So now I'm going to go create a project. So I'm going to go into all projects, and I'm going to click new. And I'm going to, again, these are your different types. So time and material, fixed price, investment, cost price, internal, and time project. In this particular one, I'm going to do a time and material. I'm just going to call it AK1. I have a project group, and again, the project groups, I'm not going to get into the finance piece of this, but there's posting profiles set up under the project groups. You also have ledger postings associated with the categories, which I may talk a bit about here in a couple of minutes. I got to keep these videos short, so I can't say too much. All right, so we're going to look for me. So there's my contract. And again, all this is here. So I'm going to say create project. And the system's going to make a new project for me. All right, so here's my project right here. Again, you can see some information came in from my customer record. One of the things that I do want to point out, because I want to put a budget on this particular one, if we go down here under budget and forecast, you're going to say, you notice this thing says use budget control. I'm going to say yes to this. And then I want to do a budget based on revenues and costs. And just I'm going to warn for overruns. Again, not a stop. So you can either tell it to disallow it, so it stops you, give you a warning, or overrides. And we're going to do it for the total budget. All right, so that is putting a project on there. Now I'm going to actually create a budget. So up here in the ribbon under plan, you'll notice that there's something called project budget. One of the things to know about project management accounting that is a bit unique opposed to other places in D365, you have to use workflows. So when I set up a budget, if I don't have a workflow set up, I can't approve or activate the budget. So if you don't really want to use workflows for budgets, then just set up your workflow to auto approve. And that way you don't actually have to approve it. The system will approve it for you, but you have to have workflow set up. All right, so I'm just going to put this here. I'll just call this AK1 original. All right. And then down here, I'm going to say, what is on my budget. A couple things to know about the transaction types. Everything is either an hour, an expense, or an item. under the cost section. And then if you're doing something out here for revenues, which I'm not going to get into that piece right now, but you'll see that you now down here you have one for fee as well. So hours is literally that. It's hours or labor. Expenses are things that you're going to expense, but they're not inventory items or like inventory items. And fees, actually, the only ledger postings associated with fees is when you bill it, and there's actually revenue. So fees don't have any costs, they only have revenue. So that's why it's in the revenue section and not up here in the cost section. So I'm just going to pick, that's fine, I'll pick hour, that's good. And then I'm just going to pick one here, and I'm going to say that the original budget, you know, is $10,000, and that's enough. Now, if I wanted, I could keep building this out. So in a real life environment, if you were doing a budget, you know, you may have like different combination of hours. You may say, I'm going to have some services done. I'm going to have some maintenance done, and those sorts of things. So you can actually build this out. Or it could be items saying, hey, I know I'm going to have to buy certain office supplies or certain equipment or whatever. So again, you can build this out pretty exclusively. And then up here at the top, you'll notice when I save, you now have this workflow button, and then you submit it. And then it's going to go through workflow. Once it's gone through workflow, it will be approved. And once it's approved, so like right here is this workflow status. Once it's approved, then we'll actually be able to use the budget. So that's how you create a basic project. In my next video, I'm going to be doing other things with this same project to show you how to put transactions against the project, what that looks like, and then how to bill it out. So I hope you join on the next video about actually posting data to the project.